Morning, everybody. It's the 9th of February. We are Signal Centre Talking Ball. I'm Joe Neighbour, joined only by Steve O'Hare this morning. How you doing, Steve?
Yeah, all fine, thanks. Yeah, looking out, looks like nice and snowy. Lovely.
Yeah, decent amount of snow last night and still coming down here.
Yeah. I sort of tried to open the window we're up in the loft. We've been kicked up there. It's a nice room, but tried to open the Velux window. It wouldn't budge this morning.
Oh, really?
Yeah. So yeah.
No, Ian, he's digging himself out to get to his computer, is he?
Yeah,
so much
exactly.
snow up north.
Yeah.
Northern softies can't handle
Yeah,
a bit of
exactly.
snow.
I mean, they can't handle it, can they?
No, obviously not. Anyway, so on to what's going on with the markets today. It was all fairly quiet yesterday and a fairly muted start again today. Big news yesterday was from the Bitcoin move on the back of Tesla's investment. They put 1.5 billion into the largest cryptocurrency, and they're going to start accepting payments in cryptocurrency as well. They've become the second largest publicly listed traded corporate holder of a digital currency. And now the big question is whether or not the rest of Wall Street will follow suit, especially the sort of tech sector, I guess.
Yeah, I mean, I was looking at Bitcoin, got it on the chart, and there's just an interesting formation that we've talked about before, and it was the previous. Well, we can actually move this to here. This is when it broke up. This wedge formation where we saw the prices obviously move to the really decent high of 41,800 on this chart. Yeah, 42,000 we'll call it for ease. We had the swing back to 28,700. This wedge broke out on the 29th of Jan and retested the cloud support, which it found, and the measured move target is 50,000 on this. So you know, we're not far away from there now. It's a mere sort of like skibbity hop for anything like Bitcoin.
Yeah.
For any other thing to move sort of 3,000 points, so you sort of, you know, which is sort of like not far off, sort of 6-7% is everyone will be sort of like saying, oh, that won't happen. But with Bitcoin, it's a morning's work.
Yeah, absolutely.
So, it's just
what's
that
going on there anyway. Your dog's going off.
Oh, I don't know. He's have we got the right microphone on? I don't want to sort of like.
It's fine.
You should be able to hear him. Let me see. Yeah, it looks like it.
Yeah, that's fine. Shut the.
I think he sold cryptos yesterday, so he's a bit peed off. He didn't see the tweet from Elon Musk, who's obviously done very well out of that tweet. It's amazing how much a tweet can influence. But we've seen it with obviously Trump, and now we're seeing it after the meme stocks.
Well, the thing is, he put on his Twitter profile, didn't he, over a week ago, Bitcoin, and then obviously the news came out. No, he's done that as well, but before that, he put Bitcoin in his bio.
Okay.
So, you know, clearly the buying commenced at that point, or it finished, or whatever. I don't know. Is that not a bit naughty?
No.
I know he can do what he likes, but you know, I don't know. He's got so much influence that he can move the price to that extent.
Yeah, I mean, so you're saying
every now and again he could just put his bio as Bitcoin. You know, having just lumped up with a load of it, knowing that all his followers are just going to, you know, come steaming in off the back of that, push his price up, and he could just be selling into all of that, couldn't he?
Absolutely. But that's the sort of like the herd mentality that we have nowadays, and there's nothing. I can't see there's anything illegal.
He's doing that.
Well, if it's different, isn't it? I suppose if he's sort of like starts to try and influence a publicly listed stock in the same sort of way, like his own company, and tries to do sort of things like that, like maybe, you know, say, oh, we're going to the moon, and you know, a sort of like, I'm going to do this, that, and the other, which will influence the price higher, and then he sells it into it, and then he's manipulating the stock. But then you've got the cryptocurrency, which is unregulated and unbelievable. I don't think you can put any sort of, you can't really sort of like go against that. That's just the herd mentality. You're getting a lot of lemmings just following sort of like these types of things.
And it
you know,
works.
and it works. I mean, that move up could have been actually them actually buying it. You know, we sort of, we haven't got the details of who's actually getting long there. I'm sure with a lot of markets, we can sort of we can get reports on, you know, the buyers. But I don't think that it takes much to influence the price in Bitcoin to the upside anyway, because you've got that sort of you know, that large group that are just holding.
Blind belief, isn't it? They're just all lumped in.
Yeah, and that's the thing. It's sort of for us, it's, you know, what is the value of Bitcoin? Is it zero? Is it 100 million? Who knows? It's sort of
No.
one of those markets that can be just one way, and and it can easily go one way the other way as well.
Yeah, as we've
So
seen in the past, but
I don't know what to
clearly
sort
no
of say about
stopping it
it.
at the moment.
Yeah, I don't know what to say about it. Really, the 50,000 is would be a psychological level. There's no real reason to sell it there, but it will be a sort of target in mind, and people will be sitting there, you know, maybe long and sort of thinking, oh, if it gets to 50,000, I'll sell it because it's a big round number or whatever, or if it gets to 100,000, I'll sell it.
Yeah.
So from a technical perspective, in projecting forward, it doesn't really leave us with a lot to talk about. We're sort of yeah, I'd buy it down at 35,000 now, whereas previously I was saying buy it down at 25, it got down to 28, and then moved higher. So whether it gets there or not, I'm sure we'll have some sort of retracement at some point. But
you think so, wouldn't you?
yeah, but again, I wouldn't sort of you know, if people out there aren't going to be patient enough to wait around for it, I don't think. But let's see how it plays out.
Okay. Well, on
maybe
to
more interesting. Yeah.
The equity markets, record highs again on Wall Street yesterday, and that helped lift sentiment throughout the Asian session as well.
Yeah.
Certainly nothing overly exciting in terms of the movements, but you know, just continues to grind higher, doesn't it?
Yeah, like we said at the start of the week, it's that's what it feels like. It feels like it's just going to be more of a grind, especially in the US side of things. They don't seem to be changing their mind about the price not being high enough. In the FTSE, look at the FTSE first. I'll look at more at the daily chart. We've sort of got potential head and shoulder top. I'm not going to say it's definitely it, because the daily cloud is supporting nicely here. But if we do get a rejection from these levels below, we've got to really watch between the 6250 and the 6300. That will be the support level. Currently, we're struggling to break above the 65, say 70 level. A break above there, I think it opens up an extended move higher towards 7,000. So that's something to watch in the FTSE. Another positive day yesterday, another all-time high in the DAX, but we started off on the back foot this morning. We can see, let's make it a bit bigger. Yeah, sort of like almost a shooting star type doji. I think they're called long-legged or something.
Well, failing to break that previous swing high as well.
Yeah, I mean, it got above it and just rejected it. So, and then with the sell-off this morning, it's quite under pressure. It's although it's only like a 70-80 tick sell-off. We'll see how that plays out. I think if we do get a break below the 14,000 and a little bit of acceleration, then that'll be key. But this 14,000 level, in my eyes, is a little bit of support at the moment. So maybe the pivot level for today.
Yeah, I mean, there's some sideways action on that. Just from a technical perspective, Steve, if it were to break that low that we saw a few days back, would you call that a double top?
Yeah, absolutely. That could be, you know, definitely a double top. Let's get the down arrow here, and let's copy it. These two levels here, that would be a double top. Now we need to get a break of the neckline, which will be, the neckline is the swing low in between. So really a break of 13,270. Seems like a long way away at the moment.
Well, it was there a couple of days ago. I mean, yeah, as we know with equity markets, it's upstairs down the elevator, isn't it? So, you know, risk happens all at once, as they say.
Yeah, I mean, we do have sort of an average range in the DAX of 225 points. So that's like 3 days worth of average trading, but we can get up to 350 points. So it could be a couple of days to get down there. So yeah, I think it's something to look at. But as we've seen for a long time now, if we sort of try to pick a top in these equity markets, we end up with egg on our face. So jumping straight to the Dow, obviously all-time highs. We've got 6 days of positive price action now. nothing going on at the moment. Probably waiting for the US to come in this afternoon and let us know what's going on there. But I don't think there's any sign of a turnaround. Obviously, Nasdaq all-time highs again. We expect a bit of a grind higher. We've broken the previous swing high quite nicely, and just looking to grind. S&P's getting closer to that 4,000 level, which we see as a little bit of a psychological level, only a little bit. And Aussie still in this wedge formation. Obviously, these wedge formations are
tightening up, aren't they?
Yeah, exactly, and they're sort of like negative, really. It's sort of, we're getting the momentum slowing as we approach these highs. So
we're going to get a break of the wedge and a break of the cloud simultaneously on that, I reckon.
Yeah, that would be good, but obviously you've got to retest it. So a swing down to the upward trending support line is a retest, so be very careful around there. When we get a clear break of these levels, I think on the Aussie 200, probably it's 6,500. Get a break of there, and then we'd be looking at the downside a little bit closer. The Nikkei storming away, really, really good. No holding that back. Again, levels to watch on the upside, 30,000, psychological level only. And this channel that we've got this is an equal channel, so it's not any type of wedge, although you could say, oh, well, we could be forming a wedge here. So, but it looks like it's breaking above it. So we'll forget about that for the minute. Looks like it's extending higher. Again, we've got sort of the 7th day of positive price action, trading around 19,500. And again, sights firmly set on the top of this channel and the psychological level of 20,000 in the Chinese 50. The Hang Seng, that's already been above 30,000, poked its head above there a couple of times and rejected it. Looks like we're heading for another retest. So all very positive on that side of things.
So
on the commodity side,
13-month highs yesterday.
Yeah. Oil, no real holding it back. We've talked about these sort of fundamentals back in this move up. I read a few more bits yesterday, really talking about obviously the sort of like the cutbacks in the oil production has left a real sort of demand's not getting fulfilled at the moment. So we are pushing towards that $61 level, which is the measured move target of the move from $10 up to 43, back down to 33, and back up. We should that lines up around about $61 so on the WTI crude oil. And we've broken out of this little channel formation. It's acting really nicely. This is what we call maybe a bullish flag, and we project this higher, and that's hitting exactly where that the projection for that channel break. So that looks quite nice. Rejected a little bit, so we might have some sort of resistance up here, but I think sort of like the $60 level will be a little bit psychological, but don't hang your hat on that. The same for the Brent crude oil. We broke out of the wedge formation, and it's gone above the projected target. So that's looking really cool.
You can see from the ATR that the range is stalling. It's not.
Yeah.
The moves aren't as big. So when you see slowdowns like that, do you think that's maybe an indication of a stalling in momentum and things?
Yeah.
A bit of correction.
It's stalling in momentum, maybe a correction, or just maybe a bit more sideways action. So we had it here. When we moved up to here, we saw that the momentum stalling, stalls, it drops off, and then bang, it's sort of like it's back up again. Now this is turning round, so we're getting we are seeing this divergence maybe in the ranges. So yeah, that's a negative undertone, but again, a little bit of time would sort that out. We could have a sharp correction, and that'll satisfy that. But we're still at going back. We can see that there's been some days where like last year where we were trading $3.5 ranges. We're back down to more of the norm now. It's all you have to do is just sort of like try and introduce a few more data points into here, and you can see that it smooths it. And but yeah, if you keep looking back, years and years, we're still
Looks like a 3D
around.
chart now with all those lines on
Yeah,
it.
it does,
Where's
doesn't
my
it? It's still around sort of mid-range. You know, we have been used to like dollar moves each day.
Yeah.
We're still elevated from there, so still plenty of
Any lines to the left that we need to be wary of on oil?
Well, I mean, with this previous swing high back from 19th of Feb, that was this was it the high last year? No, it wasn't the high last year. The high last year was actually up here. This was the January high. This is before the pandemic hit. $65 we were trading. Now a lot's changed since then, obviously, but these are levels too.
Looks like it could be a natural magnet for the price, maybe over the coming
absolutely.
weeks and months.
Yeah, I think we've got the measured move target to 61, and we've got the $65 swing high from last year. You know, we're making all-time highs in the equities. Why not make it? Well, we don't want to make an all-time high in the oil too soon.
No.
Otherwise, the economy definitely won't get off its feet. That's what I was reading a lot about the freight costs, which is impacting, especially on smaller companies. Some of the smaller companies are seeing shipping costs quadruple. And this is based on the basically the lack of the capacity on the freight side of things. That will turn around, but then obviously you've got the oil cost on the top of that freight cost, which is sort of like missing. So all the cutbacks are sort of hurting as we sort of try to expand the economy, and that's going to be impacting on inflation as well. So we got to get, obviously when the economy opens up, it's not just a case of, oh, the economy's open. There's a lot to do to get to that stage, and there's going to be a lot of capacity missing along the way. So we have to accept that inflation is going to take a bit of a knock as well, or to the upside, which isn't good for anyone.
No.
So just quickly, just finish off with. I know I've waffled a bit more. We haven't really covered FX, but I think Ian covers enough FX in yesterday to last the week anyway. Hello, Ian.
He's here now.
So gold, a little bit interesting there. Really, we've sort of like we've tested that 1785 level, which we saw last week. Didn't really get down to 1765, unfortunately. I really wanted to test that 50% Fibonacci retracement level. Still, opportunity maybe. But the short-term chart is really, well, let's look at the weekly chart to put it into perspective. We're still in this bearish channel. A break of really the 1970 level changes that. We've got a nearer term resistance at 1875, and we can see we've got off to a really good start this week. The low being 1807, the high being 1845, so quite nice. Positive start for gold. From the daily perspective, let's just get rid of a few of these things to make it a bit clearer. Even hide the Ichimoku cloud for a second. So really, these are the sort of swing levels we're looking at on the daily perspective. 1875. We've got 1850 coming up as a natural, again, psychological level. 3 positive days. Well, this day's positive so far. I feel like this is sort of like the mid-range we're in. Really, I would look to sell with a tight stop at 18, just be in front of 1875, as it's rejected it twice before, and on the downside, looking to maybe buy in front of 1800 currently. In the middle, I would leave it alone. Really, if I was forced to do something, maybe buy a dip. Or sell it around 1850 with a tight stop.
Okay.
So yeah, I don't know what I'm going to do with the guns ahead. Yeah, but that's about it. Copper, as we said, is like looking mighty fine.
Yeah. Okay. Well, what I'll do is I'll run through a couple of currency indices rather than going sort of through all the markets as Ian often does. He's typically our go-to guy on the FX stuff. So I'm just going to talk about, first up, dollar index. So we've been speaking about potential bottom formation taking shape here. This is a 4-hour chart, and I've been championing this for a good few weeks, but wondering if I'm just going to be beaten up here. I mean, this is the inverse head and shoulders that we talked about. A really nice break up, pull back to retest, and then decent move higher up to sort of 91.60. Was hoping to see it up to 92.65. That was a measured move of the inverse head and shoulders, and also a 61.8% Fibonacci retracement level from the most recent swing move that we saw from the highs in September down to these lows in January.
I think you've got a little bit of support on the left hand side of the left shoulder as well. Still, that sort of like
around
almost
here somewhere.
No, on the left shoulder, the left hand side of the left shoulder.
Right. Yeah, here.
Go left, further left. Yeah, no, not that far. Just where you've drawn the head. Yeah, there.
Right,
so that
okay.
would be that would form some type of support. So a retest of there would be likely before I'd sort of debate it completely.
I mean, obviously, we all love to see, you know, the technically classic head and shoulders, but they don't often work out, you know, as perfect as that. So maybe there'll be some support around here, and this head and shoulders will hold, and eventually we will see that move back up. But clearly, you know, there's been a ditching of the dollar, people avoiding safer haven assets in search of riskier assets, and you know, we've seen all-time highs in the likes of Bitcoin and currency and stock indices. So you know, that's not looking like it's going to change anytime soon. Looking at some of the riskier assets, Aussie dollar. This is the Aussie dollar basket 4-hour chart again, looking pretty strong. Maybe a bit of a flag that's formed there, and a push higher we could see over the coming hours. I can't make it look very nice at the moment. It's a bit gappy, this chart. Just giving you a bit of an overview. New Zealand dollar, often a bit of seen as a risk asset as well. Potentially consolidation going on here. Maybe a fresh break higher about to emerge there as well. On the euro, we looked at euro as potentially forming a top. Certainly euro dollar as an inverse to what was going on with dollar index. Let's just have a quick look at euro. Euro dollar. So yeah, I was looking at a top pattern there. Saw a decent breakdown. Was looking for a measured move down to 117.55, but you know, turn around and spinning back higher again today. So possibly invalidating that, but as Steve said, there could be some resistance around here. You know, to catch a few people out before having another go to the downside. So not totally giving up on that yet, but certainly wary of it today. Not going to go into too much more detail on the FX stuff. So Ian had a fairly comprehensive roundup yesterday, so check back on that from yesterday's video, and hopefully Ian will be back with us tomorrow morning to go through a few more of those charts. Going to the head stuff, Steve, from yesterday, not very pleasant. 3 trades, 3 stop outs. Euro dollar was my trade, and as you can see, that got stopped out. And the other 2 trades were stopped out as well. Just remember what they were.
We were all dollar positive, really, weren't we?
Yeah, so all got murdered off the back of that. Yeah, so euro dollar, gold, and Aussie Swiss. So 3 trades, 3 stop outs. Let's get back on the horse today. What have you got, Steve? I've given you enough time to find something.
Yeah, you have. Not really something that I want to do, go against Elon Musk, but why not? Hopefully it'll get me some sort of I don't know, notoriety. So we've got obviously got the MACD, the moving average convergence divergence. So just basically telling us that the price is the slowing down, the acceleration in this move up is slowing down. So that's what I'm going to go for. A little bit of reversal on the candles and a 48,200 looks like a half decent stop level. So that'll be around about the the all-time high. And let me just round that number up. 12,500. Yeah, that'll do. That'll make it easy for me to give a target, because I like to sort of like round numbers up, as you know. So yeah, I'm going to look to sell it here at 46,950 spot 42. And I'm going to look to target a reversal, a nice easy reversal down to around about the 42,000 level, which I think if we go back was a previous swing high back around here. Yeah, that'll do. That'll do, donkey. Yeah, so a target of 41,950 spot 4-2, and the stop at 48,200 spot 4-2. Keeping it nice and even with a 4-to-1 risk reward. Just a little pit back before it explodes higher.
Nice one. Best of luck. I'm going to take a look at New Zealand dollar, US dollar. Obviously, just spoke about the fact that I thought the dollar index was making a bottom pattern, and therefore, in this instance, I should probably be looking to sell New Zealand dollar, US dollar, but it may be
nice
reversing that. But this is a 4-hour chart. I've got a little bit of a range that I've found here on that chart. A decent bit of a break up above resistance here at 72.40. Bit of a pullback over the last 4 hours. If I try and work out a target based on projecting this range higher, then it comes in at 73.82. So from a risk reward perspective, buying that on that little pullback now at 72.46 with a stop loss at 72.12, looking for what's that, 4R and the short term
nice.
there.
4
just
hours
going,
the way to go.
Very much going with the trend. As you can see, keep scrolling back, it's pretty positive. So a bit of a consolidation here, maybe a bit of a break up. I'm sure I could draw some other patterns on there, maybe something like that. Highlight a bit of a flag or a pennant. So looking for a continuation higher in the short term there. That's my trade of the day.
Good luck with it, mate.
Okay, so news-wise, we mentioned yesterday that it was all very quiet on the economic data front. Another quiet day today, very few events to watch out for. There is a little bit on the corporate earnings front. Twitter, Cisco and Lyft will be of notable interest on the company front. But other than that, it's very quiet. So it could be another day where we just continue to see things grinding higher.
Yeah, wouldn't surprise me.
No, maybe that may be the case for the rest of the week. I can't.
Yeah, I think we said that at the start of the week.
Think there's going to be any catalysts that are going to change it. So just go with the flow for now.
Absolutely.
Okay, well, let's wrap it up there, Steve. I guess we'll all be back tomorrow.
Good luck, everyone.
Yeah, good luck, and see you all tomorrow.
Cheers.
Cheers, then. Bye.